welcome to the deep dive. So the markets have definitely caught a bit of a tailwind recently, haven't they?
They really have.
That S&P 500 just finished a 4-day winning streak.
Wow.
Added, what, 4.54%?
Yeah, a noticeable gain. You can almost, feel that optimism in the air.
You can,
Yeah.
but that upward momentum, it's important for you, the listener, to kind of dig beneath that surface.
Right,
Yeah.
exactly. Understand what's really driving it and what potential bumps in the road might still be out there.
Right. And that's what we do here. We've got a really interesting mix of sources today: financial news, market moves,
Updates on trade negotiations, consumer sentiment.
yeah, even some specific company stuff.
Mm-hmm.
So our mission today is to kind of unpack this optimism, figure out where it's coming from, but also keep a sharp eye on those headwinds that haven't really gone away.
Trying to give you that clear, informed perspective without, getting lost in the weeds.
Precisely. Okay, so let's start with the rally. What's the main engine behind this recent surge?
Well, it really seems like the main catalyst is the temporary cooling off in trade tensions, U.S. and China.
Ah, the Geneva talks.
That's the one. They've agreed to temporarily lower tariffs for 90 days, and they set up this communication mechanism, they're calling it.
A communication mechanism. Sounds formal.
It does. But the key is that 90-day tariff pause. And interestingly, China seems to be framing this Geneva deal as like a validation for their stance on tariffs all along.
Okay, so a temporary truce. That definitely sounds like something the market would react positively to.
For sure.
And I think I saw something about China's economic outlook improving slightly because of this.
That's right, yeah. This temporary relief has given a bit of a boost, you could say, to China's economic forecasts. Some economists are nudging their growth projections up a little.
Which makes sense. I mean, any sign of less friction in global trade is usually good news for investors, right? They like stability.
Generally, yes. Stability and predictability.
But it's not all smooth sailing on the trade front, is it? I mean, I picked up on some other tensions still simmering.
That's a really important point, yeah. Despite this pause, the fundamental disagreements are still there.
Like what?
Well, for instance, the U.S. Commerce Department just warned against using Huawei's Ascent AI chips.
Ooh, okay.
Yeah, and Beijing wasn't happy, criticized it immediately. And China's also pushing back against what they call U.S. long-arm jurisdiction.
Right, that term. Basically, the U.S. trying to apply its laws outside its borders.
Exactly. That's a major sticking point. So yeah, tariffs might be down temporarily, but the bigger strategic rivalry, the core issues, they haven't disappeared.
Okay, so the market rally might be on maybe a slightly fragile foundation then, if those tensions flare up again.
It's certainly possible. It adds a layer of uncertainty.
Right. Okay, let's shift gears a bit. Fed Chair Jerome Powell, he's been talking about supply shocks.
Yes, and what's really interesting is how his warnings kind of connect back to these trade issues. He warned about potentially more frequent and potentially more persistent supply disruptions and the chance of higher long-term interest rates because inflation could become more volatile.
More volatile inflation.
Yeah. Now, he didn't explicitly call out the previous tariffs in his latest comments, but it's worth remembering, back at the May Fed meeting, he did flag the risks around them.
So even with this temporary tariff truce, the Fed's still worried about goods not flowing smoothly.
Precisely. And we have a concrete example in the sources China's ongoing restrictions on exporting certain rare earth metals.
Right. Those are critical for, like, everything: defense, energy, cars.
Exactly. And even with this broader trade deal, those specific exports to the U.S. have been mostly blocked since, early April.
Oh, okay.
Although it's a bit nuanced, the reports also say at least 4 rare earth magnet producers, including some supplying VW, have managed to get export permits recently.
So a bit of a mixed picture there. Some stuff still blocked, potentially causing issues, but some companies are finding ways through.
It seems that way, yes.
Okay, how are consumers feeling about all this? The trade uncertainty, the potential for prices to go up because of supply issues.
That's a really crucial piece of the puzzle. Consumer sentiment, it's a big indicator for the economy's health.
How was it?
Not great, frankly. The University of Michigan's index dropped again in May, down to 50.8, which is very close to a record low.
Wow. Why the drop?
Mostly rising inflation expectations. People are expecting prices to go up more, and also persistent worries about the impact of those earlier tariffs.
So tariffs are really front of mind for people.
It really seems so. The survey said nearly 3/4 of consumers mentioned tariffs spontaneously. That's way up from the month before.
That's significant. It suggests these policies are, really hitting home for regular folks.
Absolutely, it's translating into real concern.
And those inflation expectations, they're climbing pretty high.
They are. Expectations for inflation over the next year jumped to 7.3%. That's the highest since April 1981.
Wow, 1981 levels.
Yeah. And long-run inflation expectations are up, too, to 4.6%. So there's this growing feeling that higher prices might stick around for a while.
Okay, so you've got tariff worries, rising inflation fears.
Finals.
It makes sense. Consumer sentiment is taking a hit. How's this playing out in specific parts of the economy? I thought I saw something about home builders.
Yes, that subdued feeling is definitely visible in the housing market. Housing starts in April showed barely any growth.
Which is usually a busy time, right? Spring.
Exactly. And it's being hit by a few things. High mortgage rates, obviously, high home prices still. And yeah, that tariff uncertainty again, it affects the cost of building materials.
It really feels like all these things are tangled together, doesn't it?
It really does. Trade policy impacts supply chains that fuels inflation worries, which then dampens consumer mood and hits sectors like housing.
What about other areas? Did I see something about used cars?
Huh, yeah, that was an interesting one. It seems like tariffs might actually be giving used car dealers a bit of an edge. Well, buyers are apparently facing these unexpected fees, averaging around $640. And the thinking is, if auto tariffs disrupt the new car supply,
Then the used car market gets even tighter, and maybe those fees go up.
that's the concern, yeah. It could make things tougher for used car buyers.
So tariffs aren't just about new goods. They can ripple out into used markets, too.
Yeah.
Okay, let's broaden the view. How are global markets reacting to all this? Asia, Europe, look like a mixed bag.
Yeah, definitely mixed. Asia-Pacific markets were varied. Japan's Nikkei 225 was kind of hovering around flat. They also reported a small economic contraction in Q1.
Okay, and Europe. They seemed happier initially about the U.S.-China tariff news.
They did. European stocks closed higher that first Monday after the news broke. Mining stocks did particularly well,
Makes sense.
but that initial pop faded a bit. Markets closed only slightly higher on Tuesday. Seemed like that uncertainty about the long-term trade picture kind of crept back in.
So relief, then caution.
Pretty much. Though by Friday, European markets were higher again. Rank, a defense company, got a boost from an upgrade. The stock's 600, by the way. That's just a big European index.
Right, got it.
Yeah.
So Europe's watching trade closely, too. What about investment flows? I saw Japan got record inflows.
Yeah, that was quite notable. Huge inflows into Japanese assets in April. It looked like some international investors were maybe shifting away from U.S. markets.
Why?
Well, reports suggested maybe a bit of a sell U.S. feeling, maybe some optimism about the U.S. potentially cutting tariffs with Japan specifically.
Interesting. So money moving around,
Yeah.
looking for different opportunities based on these trade dynamics.
It suggests investors are definitely recalibrating their views on different major economies.
Okay. And drilling down into Europe again, how are specific companies there dealing with U.S. tariffs? Is it hitting everyone?
Not uniformly, no. Some big names like Siemens, they say the impact's limited because they manufacture a lot locally, within the regions they sell to. But others, like the industrial giant ThyssenKrupp, they have reported negative effects, lower orders, impacting sales. And we also saw Thule Group, they make things like roof racks, right? They're a customer of Hydro, the aluminum producer. Thule says they're raising prices because their raw material costs, aluminum, are going up due to tariffs.
Right. So even if you make stuff locally,
Yeah,
if your materials are affected, the cost gets passed on.
exactly. It ripples through the supply chain.
Speaking of aluminum,
Yeah.
the reports mention something interesting, that the U.S. aluminum sector isn't really rushing back despite the tariffs. Why not?
Yeah, that's a really key point. You'd think 25% tariffs on imported aluminum would spark a big domestic comeback, right?
It would.
But it hasn't really happened. The big hurdle is electricity.
Energy costs.
Massive energy costs.
Mhm.
Aluminum smelting uses a ton of power, and the U.S. just doesn't have access to the kind of cheap, long-term power contracts you can get in places like Canada or, say, Norway. Plus, you've got this huge new demand for power coming from AI data centers.
Right. AI needs a lot of juice.
And those tech companies can often afford to pay more for power than a smelter can. So it's actually making the power situation tougher for industries like aluminum.
So the tariffs raise costs, but don't necessarily bring back the manufacturing because of these other deeper economic factors, like energy.
Exactly. And you see this difference reflected in aluminum prices. The premiums are much higher in the U.S. than in Europe now.
Fascinating. Okay, let's quickly hit some of the specific company news we saw. Quite a few movers.
Yeah, definitely some big stories. Novo Nordisk, the pharma company, their stock has taken a huge hit, down over 50% since mid last year, and their CEO is stepping down.
Wow, 50%. On the flip side,
Richemont, the luxury goods group, their shares jumped 7%. Strong jewelry sales were the driver there.
luxury doing well. What else?
Rank Group, that defense company in Europe we mentioned, up 8.5% after a JP Morgan upgrade. They see a strong outlook for European defense spending.
Makes sense given the geopolitical climate. Any big drops?
Ubisoft, the video game maker, shares plunged 19%. Their net bookings, basically sales, were lower than expected.
Ouch.
Yeah.
A real mixed bag across different sectors.
Definitely depends on the industry and specific company situation.
I also noted a couple other things. Verizon ending its DEI programs.
That's right. They're stopping those diversity, equity, and inclusion programs. It comes amid some scrutiny linked to their planned purchase of Frontier Communications. The FCC chair had raised some criticisms.
Okay. And there was a strike, too. New Jersey Transit.
Yeah, engineers there are on strike looking for higher pay. Just highlights those ongoing labor negotiations and wage pressures in some areas.
And speaking of broader finance, Moody's downgraded the U.S. credit rating. That feels significant.
It is pretty significant, yes. Moody's pointed to rising government debt as the main reason. It's, a reminder of the long-term fiscal picture for the U.S.
Okay. Shifting back to tech for a second. NVIDIA in China. Sounds like they're trying hard to stay competitive there despite U.S. restrictions.
They are. They face competition from Chinese firms like Huawei, plus they have to navigate all the U.S. export rules. They're apparently planning a new R&D center in Shanghai to help them, keep their footing in that big market.
Right, trying to balance those pressures. And lastly, the Fed. Something about stealth QE. What's that about?
Yeah, that's an interesting one. The Fed has been buying quite a lot of U.S. Treasury bonds recently.
Okay.
And some analysts are calling it stealth QE quantitative easing. The idea is, while it's not an official QE program aimed at lowering long-term rates, these purchases do inject cash into the system.
Which can have similar effects.
That's the argument some are making. It pushes liquidity into the financial system. The Fed's exact reasons and the real impact are definitely being debated, though.
Okay, so lots going on under the hood, even with this market rally. And then there's the bigger geopolitical picture, too. Trump's trip to the Middle East, for example.
Yeah, that visit's focused on a few key things: oil, trade, investment, semiconductor exports, even nuclear programs. Lots of potential economic angles there, especially with Wall Street and Silicon Valley leaders apparently tagging along.
Right, watching for announcements there. And on the Ukraine-Russia front, it seems like peace talks aren't really going anywhere.
Looks that way. Both Putin and Trump reportedly skipped the latest talks. Zelensky basically said Moscow isn't seriously engaged. So yeah, more geopolitical uncertainty there too.
Okay, so let's try and tie this all together. We've got this market rally, this feeling of hope.
Right, driven largely by that temporary U.S.-China tariff pause.
But it's bumping up against some pretty serious underlying issues. Inflation still looks high and sticky.
Supply chains are still facing disruptions, partly because of those trade policies.
Consumer sentiment is low, worried about prices.
And the signals from the global economy are, mixed at best. Some bright spots, some real concerns.
So while we got that temporary tariff break, it really feels like the big challenges, the uncertainties, they're still very much with us.
Absolutely. It really highlights how interconnected everything is. Trade talks affect inflation, which affects consumers. Central banks try to manage it all. And then geopolitics, there's another wrench in the works.
Okay, so here's a final thought for you, our listener, to chew on. When you look at all these different pieces, the delicate U.S.-China trade situation, what the Fed is doing, maybe quietly, with bonds, the geopolitical events bubbling up, how might all these seemingly separate threads actually weave together to shape your financial world in the coming months? Something to definitely think critically about. Thanks for taking this deep dive with us today.